Guys, just like I promised, I'll be dropping a breakdown video at least one every week. So this is going to be one of them. And sorry, I'm using my phone. I'm very far from my office, so I'm going to be analyzing via my phone. So currently now we are on the odd CHF, and this is a 4 hour time frame. So just like we always do, first of all, want to identify the trend of the market, which in this case is it's obvious that price is moving in a series of lower low, lower high, which is a downtrend. So in this possible scenario, want to be looking for sell setup. So now, first of all, we'll start by um, observing the structure of the market, which in this case, this swing high up here. This swing high up here is our swing high. This high is our swing high, and then this low, we can consider it as our recent swing low, but this is the major swing low, but we can just consider this as the structure of the market. So if we want to be looking for a major trade entry, it's going to be in between these two levels. So now I think there is actually a sweep right here, a sweep, so which actually confirms this point as our next swing low, because this can be considered as a protected level. So now I know where my target is if I'm looking for a sell trade. But basically, because of this market is on a downtrend, so I want to look for a short position. So now let's start from up here. So right here now, this is where price was advancing, creating higher highs, higher low until it got to this point, and then it had this failure swing. Now this failure swing, this is where the downtrend movement started. And as you can see now, if I want to start highlighting it, you can see we have a break of structure from this point. Break of structure. We have another break of structure here. And so now I want to be looking for our draw of liquidity, and want to be identifying mitigated and unmitigated zone. So first of all, right here we have this zone. As you can see, this high raided this particular high up here, and after price created this high, it had a break of structure. So now after this failure swing, this low this low right here broke structure, and then price created another another low from this point, which in this case now this setup is going to be valid because of the presence of this liquidity here. So this is an equal high. This is an equal high liquidity, and then this is an equal high. And as you can see, we have our QMR entry because of this previous order block right here was invalidated. It was raided by this movement, and then price broke structure. So now price reclaimed this order block here. This is now considered as a reclaimed block. Now, so as price got to this point, it had another break of structure again. Now it had another break of structure to the downside, which signal a trend continuation to the downside. So now we have another break of structure down here. Yeah, and then now which gives us our next unmitigated zone to be around this point, because as price got to this point, it left an unmitigated POI, which in this case can be considered to be this last bullish candle. In a bearish scenario, we want to be paying attention to the last bullish candle before a bearish move. So now we're going to be highlighting it. I'll be taking my horizontal ray to point it out from the wick. So now this is my last unmitigated zone after this major break of structure, and since price is fastly approaching towards this zone, towards this level, we're going to be looking for a possible sell to continue with the downwards movement of the trend. So actually, initially I had this setup before. I had this setup here. I'm sure most people also have this particular setup for buy. This setup here for sell, sorry. This one, yeah. But then you can't just be blinded. That's why I always say when you're making your analysis, you should always pay attention to unmitigated POIs before you look for an entry model. So most people can be blinded by the fact that they are seeing this entry model and then they will just take it without even considering what liquidity is resting above their POI or what unmitigated zone is waiting for them. So now this entry now it can play out, but it's not realistic because of the presence of this unmitigated zone here. And in fact, as you can see, this equal high now, price swept the liquidity. Price swept the liquidity. So there is a liquidity sweep here at this point here. The liquidity sweep here, which actually add to the confirmation of this particular setup. There's the liquidity sweep, which in fact price this POI here is going to be taken out as inducement. This price is going to induce this POI and then tap into this level. So that's why I said this setup is high probability setup. So now we're going to be taking our entry from this zone, this short position is our short position tool, and then we'll take it here. And then now for our target, like I said, you want to also pay attention to where price is coming from and where price is most likely going to react from. So now in this case, I'll also be checking out for unmitigated zone and sweeps of liquidity. So in case price wants to continue going up, where it's most likely going to retrace to after coming to this zone, after triggering our sell. So now what do we have here? Let's start from this low. First of all, now I can identify this unmitigated POI, which can act as a potential demand level, and price did not sweep this last low, which also in my own terms I consider this as price can act. This is a spending sell side liquidity that price might take out. And we also have this other block here is unmitigated. Okay, this other block here is unmitigated. This one is mitigated. This one is not mitigated. This one not mitigated. Not partially mitigated, or let's say price. No, this is not completely mitigated. So because of this, I think all of this even add to my confluence, since price is not giving me an obvious mitigation or a particular sweep of this low. So in fact, before I was trying to target a 1:4, but because of this, after seeing this, in fact, I'm more certain that price is going to take out this sell side liquidity that is resting below here, because there is no valid sweep. Although this low can be considered a sweep because I think it took our liquidity off this previous level, but then I'm supposed to see a candlestick, at least one candlestick, to sweep this last low, which in fact I didn't see here. So this can also be considered as a relative equal low. This level can be considered as a relative equal low, which is also another form of liquidity for price to grab, meaning that there might be pending stop loss or buy order that are sitting below this level. So now our stop loss is just going to be right above this zone. Yeah, so in fact this is going to be almost a 1:6 risk to reward ratio. So let's see how this setup plays out. Yeah, that's the end of this video.